How to pick the best funds for your pension or ISA. So the first thing you need to do is think about your objectives. Is it growth? Is it income? Is it capital preservation? Are you looking to diversify a bit away from your existing holdings? And what timescale are you considering? Is it longer term, like 5 to 10 years? Or if it's shorter term, then you might be more going down the capital preservation route. With thousands of funds available, you're going to need to use a screener. And the first thing you're going to screen for is performance, probably over 5 years. So we come to the website, pick a fund, and we select fund type as equity. We're selecting region as global, and we're selecting market cap as large cap. And then we hit see 996 funds to start our search. We select sort by net total return 5 years, and our favourite fund, Royal London Global Equity Select, comes in at number 1. So we've got the growth rates here, and what is important as well is to look at the sharpe ratio, which is returns adjusted for risk. And we can see that although number 2 is this Global Innovators Fund from Guinness, it's got a much lower sharpe ratio, which implies that its price performance was more volatile over the last 3 years. So the Royal London Global Equity Select had higher returns, but then also more stable returns. So next we hit the basic filters button and apply a few filters. So we can filter by things like cost, ongoing charges, returns net of fees, and also can filter by quartile, and then we can filter by risk, which I think maybe needs a bit more definition, and we can filter by net assets and yield. And what we've done is we've filtered by net assets of 250 million or more. And we can also filter by platform to select funds that have a platform you can buy them on. And then if you register for an account with Pick a Fund, which is free, you can click on Advanced Filters. So then within Advanced Filters, you've got all these different features, and I've selected sharpe ratio of 0.5. And I did that to get rid of some of the tech funds that are kind of disguising themselves as a global fund so they can rank higher in the quartile rankings. So we've got Royal London number 1, Guinness Global Innovators, which is still a bit of tech, number 2, JP Morgan Global Growth and Income number 3, that's a fund we like, L&G Global 100, that's a fund we like, number 4, Pinebridge Global Focus, never heard of it, and we've got a whole load of other funds as well. Once you have a rigorous process for selecting funds, investing becomes a lot easier. The first thing we're looking for is consistent returns over a 5 or maybe a 10-year period. And we might have to subtract the returns from the final year in order to capture mean reversion. And what I mean by that is that some funds have had a very good recent 12 months, and that's distorted their 5-year or maybe even 10-year record. They've gone up a lot recently, and the fund could plateau in the next few months or even reverse back to a more longer term sustainable growth rate. So if a fund has had growth in the last year that's compatible with its growth over the last 5 or 10 years, then this process won't alter its ranking at all. It's only those that have had an incredible and possibly unrepeatable last 12 months that will be dropped out of our list. Fees are a very important consideration when picking a fund for your SIPP or ISA. So as an example, for a UK income portfolio, we could use an active fund like Merchants Trust, which has a management fee of 0.35%, but an ongoing charges fee of 0.65%, where the latter includes the charges for buying and selling shares within the fund. We could look at a passive fund such as iShares UK Dividend, which has a 0.4% ongoing charges fee, or we could try and create one ourselves using maybe a trading 212 Pi, but I don't have an account there. We have to look at the length of tenure of the fund manager, which we'll get from the fund fact sheet, because we want to focus on the performance of the current fund manager rather than previous fund managers who might have had a slightly different style. We want to look at the objectives of the fund, which should be quite detailed and clearly stated, so we can see whether the remit of the fund matches how we would like to invest. So for a growth fund, you might find growth at a reasonable price, which means not overpaying, and that's something that Fundsmith engages in. You might want to look at profits growth, which is maybe something more like Blue Whale, or you might want to look at growth potential, which could include loss-making companies and almost like anything goes, which is more of a Scottish mortgage type of remit. The next, you might want to look at the size of the fund, and I very much like flagship funds where there's some reputational risk around them and where there's a lot of management attention being applied to the fund. I like this quote from Hargreaves Lansdown where they say, "We look for experienced managers with plenty of research, resource and support," and I think that's definitely the case at JP Morgan Global Growth and Income. If funds are too large, which is possibly the case with Fundsmith, it becomes difficult for them to capitalize on some exciting opportunities, and it can become difficult for them to exit a position as they have such a large holding. And these things apply particularly to things like small cap funds or potentially emerging market funds. But then equally with funds that are too small, maybe below 250 million in size, when the average is about 3 times that, I'm very suspicious as to why they haven't attracted many investors, so I tend to give those ones a miss. With regard to the overall profile of the fund, I like to use the Morningstar website, where if you go under portfolio, you can put up things like this. So it looks at whether it's got a growth or value orientation, whether it's got a high or low yield, whether the price momentum is good or not, whether it's looking at quality or not, and then the size, whether it's large or small. And then I can get a feel for how the fund is operating relative to its peers. Funds have to disclose their top 10 holdings, but this is often unreliable because it includes funds they've held that have gone up a lot. So these are the top 10 holdings of JP Morgan Global Growth and Income, and Nvidia has a solid performance in the top 10 because it's increased in price so much recently. What you might be better off looking at is the bottom 10 holdings, and then you'll find the dogs of the portfolio and maybe how it sometimes comes unstuck. Some funds you can download all the holdings, and that's a really useful thing. So this level of disclosure is quite important when investing in a fund. Should you use recommended fund lists? So here's one from Interactive Investor. There are some good things in here like the iShares Core MSCI World ETF, but things like JP Morgan Global Growth and Income are missing, and we've got F&C Investment Trust instead. So I think they give some useful information, but they're not necessarily the funds that I would have picked. And here's the global funds on the Hargreaves Lansdown recommended list, which are interesting, but they're not necessarily the ones that I would have picked. Morningstar gives funds a medal rating relative to their investment process and how rigorous they are and consistent they are at selecting companies. And then it also gives them a star rating, which is the performance relative to other funds in the sector. These are the gold medal rated investment trusts, and they're not necessarily ones that I would really buy myself, apart from the top one, the Fidelity European Trust, which has a pretty good long-term record. This is the sector exposure of JP Morgan Global Growth and Income that I got from the Morningstar website. When selecting a fund, I very much look at its sector exposure. I'm not so interested in the country exposure unless it's emerging markets, or I'm looking at things like exposure to China. What I'm looking at is things like, well, does it have decent exposure to healthcare, technology, and consumer staples? Does it seem to have the sort of sector exposure that I would have if I was investing purely on my own? The quality of information provided by the fund is very important. A lot of exchange traded funds will provide you with the price to earnings ratio on a daily basis, which is really useful to see whether the fund is under or overvalued. Unfortunately, most active funds won't tell you this, so you've got no idea whether the fund is potentially overpriced and you should exit. Here's some useful fund information from Artemis. It gives you information about an overview of the fund, some awards that it's got, the investment team, some research insights, the performance of the fund, the holdings of the fund. Also gives you information on the risk rating, the yield, the charges, and the objectives of the fund as well. So something like this is quite useful to give you confidence in a fund you're investing in. For investment trusts, there are some extra considerations you need to take into account, such as the cycle between the price and the net asset value, and they are covered in the video linked at the top of the screen. So ultimately, the idea is that you become unshakable in your conviction to the fund because you've done so much research and you're confident that the fund matches your objectives. Should you use a financial advisor? Well, some people should because they just get too confused during the research process. Some can do it absolutely well just on their own, and a lot would benefit from having a coach such as myself acting as a sounding board and helping them with their fund selection to get the best that match their investing style and their portfolio. This is part of a series of videos which includes selecting the best broker for you, how to move your pension so that you take control of it, and how to construct a portfolio of funds. If there's anything I've missed from this video, please put it in the comments so other people can learn from it.